Hi, my name is Dr. Brett Edgerton, founder of the website homes4aussies. My comments today are primarily intended for fellow generations X, Y and younger. It's important that we discuss the housing affordability crisis, even though you probably don't want to be brought down about it, because it's something that we are going to continually confront. Firstly, I think it's important that we all realise that even though there have been housing bubbles in much of the world recently, ours is the biggest. Our house prices are the most expensive relative to wages in the Western world, and here's a graph from the Reserve Bank of Australia that proves it. Because there have been housing bubbles throughout much of the world, obviously there were some causes that are common to all countries. These include cheap credit, mainly coming out of the US credit markets, which is now reversed, hence the credit crunch, and restrictive land development policies from governments that have pushed up the price of land in most countries. But if you look closely at the RBA graph, you will notice that our houses, compared to our incomes, are more expensive than in New Zealand, the United Kingdom, Canada, Ireland, and much more expensive than in the United States, even though we hear a lot about their housing bubble in the media. Also notice that this has been the case for a long time. In fact, there were only a couple of years when we did not have the most expensive houses. Now, I don't need to tell you that it is the younger generations that have borne the brunt of the housing affordability crisis. Due to bad luck with timing, we are in the position of not being able to afford to buy a home in which to raise our young families. Even finding and paying for a decent place to rent is challenging. My own rent has been raised from $320 per week to $420 per week this year, an increase of over 30%. And newspaper reports show that we're not alone in that. It's important to know that our Reserve Bank recently said in this research paper that increasing house prices do not benefit Australians as a whole. They did, however, point out that high-income earners tend to gain when property prices increase, but low-income earners suffer, and suffer is the word that they used. And here's a very recent report on the ABC website quoting a published survey. The headline reads, "Baby Boomers Hog Housing Market," and it says, "A survey has found evidence that people in older generations have made it increasingly difficult for younger generations to break into the property market." Now there are links to both of these articles on my website. We all need, especially us at the pointy end of the housing affordability crisis, to think about why our houses are so expensive compared to the rest of the world. The conclusion that I have drawn on why our houses are so expensive is that, unlike most countries, government policies, including taxation policies, actually encourage widespread speculation in housing. Again, that's no surprise to anybody. You would have been under a rock over the last decade to have missed all the property investing hype. But let's look at why there is so much enthusiasm for property investing in Australia. You probably have heard a lot about negative gearing, where losses from investment property can be offset against other income, including from a regular job, so that investors get a big tax break. Of course, it's not worth doing unless you have a high income. But let's just consider this for a moment. Imagine you join a gym or a fitness club, and for fairness, the amount of fees you pay is in line with your income. If you're a kid and you have no or little income, you don't pay anything to use the facilities. If you're older and you have a full-time job, you pay $1,000 a year. And if you have a very good income, you pay $2,000 a year. Now the catch is that if a high-income earner owns investment properties which make a loss because of interest payments and so on, this can be used to reduce their income and get the gym fees reimbursed. So high-income earners regularly buy properties to continually make a loss. Of course, they intend to eventually sell and make a very big profit, but for the moment they use that loss to say they have virtually no income. So the gym reimburses them their fees, and they enjoy all of the facilities on offer without paying a cent. This is essentially how negative gearing works, only the gym is our country, Australia, and the facilities that these high income earners are using for free are the roads, schools, hospitals, and all of the things that all Australian income earners are supposed to pay for through the taxation system. You might also be aware that since 2000, property investors only pay tax on half of the profit after selling a property, so long as they have owned it for 12 months or more. Now, I don't think that anybody could seriously argue that owning a property for 12 months is genuine long-term investing. Now, there is a new perk as well, where people within self-managed superannuation funds can borrow within that fund to invest in property. You may or may not be aware that there are a lot of benefits, particularly for older Australians, to plough a lot of money into super, especially through salary sacrifice. And as of last year, these self-managed funds, which have a maximum of only 4 members, they're usually a high-income earner, couple or family, had an average balance of $800,000. So all of these perks, or what some people, including myself, call rorts, give high-income earners, mostly older Australians, a lot more money in their pockets when they go shopping for our homes as investments. In other words, our homes, Aussie homes, are being used as casino chips in the hopes of making investors wealthy. What's more, all taxpayers are paying for those well-off Australians to speculate on housing. It's not their money that they're gambling with. It's all of ours because they are not making a fair contribution to the running of our society. Now, I have no problem with people investing with the aim of having a comfortable retirement. If successful, following generations of taxpayers will need to contribute less to their cost of retirement. But I do have a problem when the playing field is very much tilted in favour of investors. What's more, this has made housing such a huge investment bubble that I reckon that the majority of investors are actually going to lose money. That means we are going to have to pay for their retirement, but I'll return to that in a moment. This year there was a Senate inquiry into housing affordability, and they made a number of key recommendations in regard to taxation of housing in Australia. They noted that there is currently a major review of taxation in Australia called Australia's Future Tax System, and they said that this review should consider the implications for housing affordability as well as the overall fairness of the tax system, of the tax discount for capital gains on investor housing and current negative gearing provisions. And as a final point, it's worth hearing from a Reserve Bank governor about taxation and housing. New Zealand has a very similar situation to us, and here is what Alan Bollard said on Radio New Zealand in early August 2008.
We need to have domestic policy in a way that doesn't mean it's advantageous from a tax point of view for people to pile money into housing.
In case you did not catch that, he said it is not good tax policy to encourage people to pile money into housing. Now, of course, exactly the same thing goes for Australia. Now, okay, I think I've made it very clear that we have a problem here, and I've shown that tax advantages to higher income investors is a major part of that problem. I just want to take one moment to explain just how much all of this affects generations X, Y and younger. Because believe me, we are receiving the short straw here well and truly, and all of the ways that we are losing out are not completely obvious.